due to a low base of the same period in 2020. After deducting the base effects, major indicators grew steadily and macroeconomic indicators were within the reasonable range. First, accelerated growth in industrial production, sound growth of equipment and high-tech manufacturing. Total value added of industrial enterprise over the designated price increased by 35.1%, up by 16.9% compared with the same period 2019, up by 8.1% for a two-year average, registering a relatively high growth for the same period over recent years. Stakeholding enterprises up by 23%, shareholding up by 34.2%, and enterprise by foreign investors up by 41.4%, private enterprises up by 34.8%. Mining industry up by 17.5%, up by 4.8% two-year average. Manufacturing 39.5%, up by 8.4% on the two-year average. Production supply of electricity, heat, gas, and water up by 19.8%, up by 5.5% on the two-year average. Equipment and high-tech manufacturing up by 59.9% and 49.2%, up by 10.2% and 13% on the two-year average. New energy vehicles, trucks, industrial robots, machinery, microcomputer equipment all exceeded 100% growth over two-year average growth of both over 10%. In February, value added of industries above the designated size went up by 0.69% from January. The Manufacturing Purchasing Manager Index of February was 50.86, above the 50% threshold for 12 consecutive months. Second, gradual recovery of the service sector with business activity index for services staying within the expansion range. The index of services production up by 31.1%, up by 14.1% compared with the same period 2019. Real estate and that of information transformation software, information technology up by 51.4%, 26.1% with respective two-year average growth of 11.8% and 14.4%. In February, business activity index for services was 50.8% higher than the threshold for 12 consecutive months. That of retail, catering, and entertainment were all within the expansion range and higher than the previous months. In terms of market expectations, the business activity expectation index for services were 7.9 percentage points higher than the previous months. 3. Continued growth in market sales. In the first 2 months, total retail sales of consumer goods reached 6,973 billion yuan, up by 33.8% and by 6.4% compared with the same period 2019, registering a two-year increase of 3.2%. Retail sales in urban areas reached 6,055 billion yuan, up by 34.9%. That in rural areas was 918 billion, up by 26.7%. The income of catering industries was 708 billion, up by 68.9% and down by 2% on the two-year average. The sales of most goods grow, with that of upgraded consumer goods enjoying fast growth. In the first 2 months, 18 categories of goods in the retail sales by enterprises above the designated size registered an over 10% growth. Retail sales of communication equipment and that of sports and entertainment goods grew by 53% and 45%. In the first 2 months, national online retail sales reached 1,758 billion, up by 32% year-on-year. Specifically, that of physical goods was 1,441 billion, up by 30%, accounting for 20.7% of the total retail sales of consumer goods. In February, total retail sale of consumer goods grew by 0.56 6% from the previous month. Fourth, steady growth in fixed asset investment. Fixed asset investment reached 4,523 billion yuan, up by 35% year-on-year and by 3.5% compared with the same period of 2019, a two-year average growth of 1.7%. In infrastructure, it grew by 36.6% and dropped by 1.6% on the two-year average. In manufacturing, it grew by 37.3% and dropped by 3.4% on the two-year average. In real estate, grew by 38.3% and by 7.6% on the two-year average. The floor space of commercial residential buildings sold reached 173 million square meters, increased by 104.9%, and the sales was 1,915 billion, increased by 133%. Fixed assets in the primary industry grew by 61.3%, that in secondary industry grew by 34.1%, and in tertiary industry grew by 34.6%. Investment in high-tech industry grew by 50.1%, among which the growth of high-tech manufacturing was 50.3%, and that of high-tech services was 49.8%. In terms of high-tech manufacturing, investment in computer and office equipment, medical equipment, measuring instrument and equipment grew by 99.5% and 66.6% respectively. The investment in social sectors grew by 48%, among which that in health and education grew by 63% and 53% respectively. In February, fixed asset investment was up by 2.43% from the previous year. Fifth, strong momentum of growth in foreign trade. And sixth, a drop in surveyed urban unemployment rate with generally stable employment. In the first 2 months, 1.48 million new urban jobs were created in January. The surveyed urban unemployment rate was 5.4%, and that of February was 5.5%, down by 0.7 percentage points from the same period last year. Surveyed unemployment rate between the age of 16 to 24 and that of between 25 to 59 was 13.1% and 5%. In average, employees across China work 46.3 hours per week, and 7, a decline in consumer price and increase in industrial products. In general, we have maintained economic growth with positive factors. At the same time, we are still seeing the spread of COVID-19 across the world, and we are facing with severe challenges. We have severe challenges ahead. Going forward, we will stay committed to the guidance of the Xi Jinping thought on socialism in the new era, maintain stable development, and maintain security in 6 areas. We will double the efforts to promote the implementation of every measure to ensure a good start of the 14th five-year plan period. Thank you. Now the floor is open for questions.
关政策实施有效，
疫情防控和经济社会发展的成果得到巩固扩展，支撑经济稳定恢复的积极因素累计增多。二是外部。
今年以来，